Hey everyone, this is Danielle. I hope you're enjoying CPI Day. So far, we have seen a little bit of turbulence. We've got the Nasdaq, it is currently down 1.23%. And I'm going to be going over a couple different charts that are just key and pivotal right here and now after this announcement. Now, if you've been following along with my work at all, you'll know that I trade the squeeze. I trade direction. Primarily, I like to stick with the trend. It's a lot easier to follow the trend than trade charts that are all over the place. So, I am a trend following directional trader. Now, what I will tell you is that sometimes the trend can break. And a lot of the times that is because of some sort of news related announcement, like what we got this morning with CPI. So let's go ahead and look at the cues, and I'm going to show you, what happened, what will probably happen if this does end up breaking. Now, as of right now, we are still consolidating in a squeeze. The squeeze has not triggered to the downside yet. Generally, the majority of the time, the squeeze will fire in the direction of the trend, except when there's a catalyst to the downside, right? So let's look at this squeeze and let's say, okay, what if it does actually fire to the downside? Should we be hedged? What would that look like? Well, in this case, you can see that the QQQ is holding up above a couple different key areas of resistance, or sorry, support. Right now, you can see that it's holding up above 435. That's not only a key psychological value, but it's also where we have, a bunch of different touch points, a bunch of different areas of support with this trade. So it is holding up there right now. But if the weakness continues, where could it go? Well, I think that the next zone is going to be down into 430. So sometimes what I will do is I'll put a hedge on with the QQQ if I think there's a chance that one zone of support is going to break and it'll head to the next zone of support. The most important thing with the squeeze is you want to look for breaks of support. You want to look for breaks of the low of the high bar in the series. So in this example, your high bar is right here. We have actually had multiple breaks of the low of that high bar. And so that would tell you, hey, things are weakening up. This might actually trigger to the downside. And then the next thing you want to look for is you want to look for the low bar. So where's the low bar? It's going to be right here. It's the low bar in this series. If we do get a break below that zone, that's where you generally look for a flush. Your first target's going to be the key psychological value down below. And then after that, you just need to look for some sort of price support and your next key psychological value. And since I'm an options trader, I use high open interest in the options market as well. So that would be 420. So different things that I'll do in the options market is, you can place like a debit spread targeting 430. You can place a butterfly targeting 430. And then you can have a lower trade as well targeting 420. If you don't want to get into all that complication, you can very simply sell call credit spreads, or you can just buy out of the money puts in case the market kind of falls apart. But there's a couple of different other ideas I'm going to talk about in the instance that this NASDAQ squeeze ends up firing to the downside. Now, I'm also going to show you another reason why I think it could fire to the downside. And that is because of the 10-year Treasury yield. Now, if you look at this, it has been continuing to creep higher. You can see where it bottomed out kind of at the beginning of the year there. And it's been in this nice, solid upwards trend, which has not been good for the housing market, has not been good for rates. And now that we've seen CPI increase yet again, and the Fed is talking about the potential that, hey, maybe we're going to push out rate cuts further, maybe we're not going to cut at all. Certainly, that is something that's going to have a negative impact on the stock market and the Nasdaq, and could very well cause that squeeze in the Nasdaq to fire to the downside. Now, why would the squeeze in the Nasdaq firing to the downside be so detrimental? Because when you have a huge momentum move in a major index, it's usually going to take the majority of the boats with it, which is going to include, Microsoft, Nvidia, Amazon, Apple, Tesla. So, anyways, getting back to the 10 year, with the 10 year, you can see on this weekly chart that it actually has a really bullish pattern. It's pulled back into support. It's continuing to trade higher. It's breaking up above some critical areas of resistance. And this is a bit of a cup and handle pattern. So, could the 10 year get back up to those previous highs up at 50 when I think interest rates were like what, 8.3% on the 30-year mortgage? Don't quote me on that, but it was around there. So if that happens, if this continues to trigger to the upside, it's definitely going to have a negative impact on tech stocks. So what is something else that you can look at and trade? Well, the semiconductors here, I would say, are probably going to be the most important space just because this has been the area of relative strength. This has been the spot that's really been driving the rally between AI and all the hype there, technology in general, and then, semiconductors specifically. When you look at the weekly chart here, this chart is incredibly extended. It's made just multiple targets on the way up. So, anytime you have a chart that has been on fire and it's extended, definitely a time to look for any kind of potential pullback, even though I'll tell you on that weekly chart, I'm not really seeing a sign of that yet. But the reason why I wanted to look at a daily chart with you is because this daily chart is in a squeeze. So when there is a squeeze, you will know that that means that this chart is setting up to make a greater than expected move. Now, normally the squeeze will fire in the direction of the trend, which in this case is up. But it will happen sometimes when there's a news related catalyst that the squeeze fires the wrong direction and you end up getting a big pullback. So, SMH is a key and pivotal chart to watch. You have a critical area of support that it's sitting on right now at $221 a share. I would say, definitely if it broke below 218, that would be a spot to say, this is getting a little bit dicey. We may see a bigger reversal here, but certainly below this low right here, which would be around 213, 215. And that is where we would see a pretty big reversal. And that would be a major warning sign to, lighten up your portfolio, look for hedges to the downside, look for, you know, more serious downside trade. You can go back and you can look at when the squeezes have fired to the downside. So, for example, there was one right here, December 22. You had these red dots. Um, Red dots are the squeeze, and then the green dots after that are demonstrating that the squeeze is firing. So this was an instance where we did have this upward trend, and then all of a sudden, boom, it just gets clobbered. Here's another example right here where the squeeze ended up firing to the downside. Now, both of these examples, they're not, it's not completely disastrous or anything like that, but it certainly does break the upwards trend for a while, cause downward price action before you ultimately resume to the upside. So definitely something to watch out for. Now, if you want to look at some of the more, serious moves, that's where you can get into like something like this, where we really saw like a deeper pullback. I'm not suggesting that's going to happen, but this is a important chart to watch. Now, when you're looking at, potential options that you can use, to trade a downside move. You'll notice that pretty much every single video I make is going to be on bullish tickers. That is because I trade with the trend. But if and when the trend starts to break or things are getting frothy, sure, I'll short something. Right now, I'm short Apple. So, why am I short Apple? Well, if you look at Apple, Apple has been in a downtrend. So, we've had relative weakness with Apple. Apple also has a daily squeeze here, and I think this daily squeeze is going to fire to the downside and send this stock cratering lower. There's a couple different reasons for that. The relative weakness, as I mentioned, also because it's sitting on a ledge. Anytime you're sitting on a zone of support like this, and all it takes, is really just one gap down and then so there's that. I think that if it falls off of this ledge right around 167, 168, it's probably going to fall into 165, if not 160. So I do have some long puts on Apple. The other reason is because of earnings. So the past 3 earnings reports in a row, we've seen gaps to the downside. Anytime you have a stock that has experienced 3 gaps in a row to the downside after earnings, um, people are not excited for the next earnings report. Okay. And Apple has another earnings report that is coming up on May 2nd. So if you look at that and you say, okay, what if the Nasdaq falls to the downside and then we start seeing earnings from Tesla and Netflix and, we get higher prices in the 10-year? What's the likelihood people are going to be excited about Apple earnings? It's more likely that they're going to be nervous and it's going to, roll over. So I am short Apple. The other one that I want to look at is going to be Tesla. Tesla has been a relative weakness name for quite some time. Tesla has had the same problem as well as it relates to earnings. We've seen Tesla gap down, 4 quarters in a row after earnings, especially last quarter. It was a particularly nasty gap. And it's had some up days, of course, but it's in a downtrend. It's in a downtrend. It keeps hitting resistance. It keeps failing. And now it has an earnings report coming up very soon. So if you look at the earnings date, the earnings date is going to be on the 23rd. And so I think that there's a pretty good likelihood that Tesla continues to fail at this resistance, and it breaks and triggers to the downside. So those are the warning signs that I'm looking at. There's a couple different ways you could trade it. You could hedge the QQQs. You could keep an eye out for SMH. If SMH falls apart, it's going to be a whole nother scenario because there's all kinds of semiconductors in there we could trade. I, as a rule, don't like to short the semiconductors because I think that they are the relative strength space, and it's more likely that they initially fall and then you can buy the dip. So I don't generally short those, but I will short these relative strength losers that are already in a downtrend. They're consolidating and they're likely to break out. So that's what I have for you today. These are the top 5 charts. If you want to be able to do analysis like this, sign up for stockcharts.com. These charts are great. They have the squeeze. Nice, simple, easy to use. Click the link below. Also, if you want to learn more about me, follow me on YouTube. This is my channel right here at Trader Danielle. Make sure you don't follow the scammers. There's another one pretending to be me, but this is mine, the pink one. So, hope you have a great rest of your day, and I will see you in the next video.